Hey everybody, it's Hussein Kabani, your favorite broker. I want to do a quick video here about going to the bank for a mortgage or going to a mortgage broker for a mortgage. Some of the differences are with both of these guys, and I think that there's a myth out there that basically if they go through a mortgage broker, you're going to end up paying a higher rate, which is incorrect. So realistically, what ends up happening when you go and you qualify on a rate, it's based on your information. So it depends on what your credit score is, how much debt you have. It's a wide-ranging criteria about who you are, and that's basically the rate that you get. So if TD, for example, has a rate of like 1.99% on a 5-year, doesn't mean that you're going to have to pay more at a mortgage broker. It could be the same, and there might be a small chance that it might be a little bit less, because sometimes when they do bulk deals, they might be able to buy back the rate, they call it, for a little bit less. So I'm not sure if it would be valid on a 1.99, but sometimes, you know, the lenders out there at 2.5%, they might be able to get it for you a little bit less, 2.47%. It's not always the case, but mortgage brokers sometimes do have that flexibility to buy back a rate. With the mortgage broker, I feel like it might be a better move for people to go that route, and the advantages over there are this. Mortgage broker, for the most part, what they can do is they could take a look at your information that you have right now. So they could look at, you know, you could pull your own credit. A lot of people have these credit monitoring services, so you can show them what your credit looks like right now. You could show them your employment. You could show them your tax filings. You can show them, you know, these informations that they're looking for right now. And what they should be able to do at a high level is get you an idea based on your credit, based on your income, based on how much money you have to put down. This is what I feel like you qualify for. At least it just gives you an idea to begin with. What I find sometimes with banks is that they want to sit down. They really want to try to convert you very quickly. So they want to like put all your information in. They want to do a credit search and this and that. Nothing wrong with that, but I just find with the mortgage broker, if you talk to them in the right way, they could probably get you some of the preliminary information without you having to go through too many hoops. The other thing I like about working with mortgage brokers is this. Almost everybody has some kind of a situation or some kind of different, you know, situation that they are actually in. So with a mortgage broker, if they know what they're doing, they will know what the requirement is at Scotiabank. They're going to know what the requirement is RBC. They're going to know the different institutions. So when they see your information, they're going to know, okay, you know what? They're actually buying a property with a basement apartment in it. And I know that RBC, for example, and I'm not sure if this is true, but RBC, for example, might be actually looking at the income from the basement at 100%, whereas TD might look at it at 50%. So in order for them to qualify, it might be a better idea for them to go through RBC versus TD because they understand that program better and they know where your ratios are going to be because they've looked at your information already. They are able to help you kind of navigate which lenders to go to and still get you that top rate. Another reason I like to work with mortgage brokers sometimes is they have a little bit more experience on like less traditional type of deals. So they'll work with more people that are even like self-employed. You know, they'll have a better idea of, again, where to place self-employed people and what parts of the incomes that they could use and the write-offs that they can use to add back or deduct from their income in order for them to be able to qualify for a mortgage and again, where to place the mortgage. Another thing that could be useful with a lender or a mortgage broker is that they also have access to private lending. So there might be something that you're trying to do that you try to go through a typical bank channel and they're not going to be able to do for you. For example, if you want to buy a piece of land and it doesn't have any houses on it or anything else like that, but it's a piece of land and you think that you're going to be able to do something with this piece of land in the future. You know, the land value might be, say, example, $500,000, but the seller wants to sell it for $750,000 because they realize the potential of this as well. So do you. But the bank values this at the value of the property is $500,000. So, and some banks won't even lend you on raw land value because there's nothing really that's going to support the income coming in from it. What ends up happening is that you could go to a private lender, whereas they will charge you a higher rate, probably even a lender fee, but be able to secure financing for that. So it could be on a piece of land that you're speculating on, or maybe you have a piece of land and you already own it, but you want to build a house. They can help you out with like construction financing. So they have a program for that. And sometimes it's just that you want to get in the market. You have a little bruised credit, maybe you don't have a ton of money down, but you have other security. So private lending will look at it in a different way. Likely with private lending, you're going to pay a higher rate, you're going to pay some kind of a lender fee, but that's how a private lender works. But a lot of times with the banks, you don't even have these opportunities to get these things funded over there. But banks at the same time do have an advantage as well. I can attest to that. You have to have a relationship with the bank. This is my opinion. You have to have a relationship with them to take advantage of what they can actually do for you. One of the situations that actually happened to me, so I do a lot of my banking with TD, so they understand who I am. I've had a credit card with them since I was 18. So I have a lot of history banking with TD. But what happened is that I was negligent, and I have this card that I don't really look at. It's an MBNA card, and I know there was a little balance going on in. I got lazy, or I didn't notice, I didn't pay it. Long story short, they actually dinged my credit. My credit score dropped. I had pretty good credit score, and it actually dropped quite a bit, and showed that I didn't make payment in like 6 or 30 days. While all of this was going on, I was actually trying to apply for another loan with TD to buy something else. The person I work with at TD knows me, knows my profile or whatever, so he never actually looked into it. He's like, yeah, based on your stuff, like, you're fine, you should be fine. So he just submitted the application, and it came back declined. So he'd asked me what had happened over here, like, why is it declined? He looked into it, and he said that, I missed a payment over here. But because of the relationship I have with the bank, what we were able to do is we were able to write up basically a letter to the underwriter and say, hey, this is what's happened, and look at the situation. And we were able to submit that, and they looked at it and took it into consideration, and they still funded the loan that I needed. So this is where a relationship with one lender could actually help you out. Another thing that could be beneficial with the same lender is this: if you have a relationship with them, likely they have most of your information already. So for me, when I go to apply for new loans and stuff like that, usually when I'm working through TD, they don't ask me a ton of information. It's also the relationship I have with my mortgage contact over there as well, but they're able to kind of expedite the process and make it less stressful for me. Sometimes when I think it's going to be stressful to secure financing on something, it works out pretty easily because I have a good contact and I have a relationship with the bank itself. So it's not all negative going to a bank. I just prefer to go through a mortgage broker. Even in the future, I'll probably have to, because TD at some point is going to tell me, hey, we're not going to lend you any more money. You're starting to look like a risk to us. I'm sure that will happen. I know it's happened to other people. So that's where you have to start moving off to possibly a mortgage broker to be able to help you structure these deals. So yeah, overall, I think a mortgage broker could be a lot more creative and able to help you secure financing. Another thing also is that you don't typically pay your mortgage broker, okay? The mortgage broker gets compensated by the lender. There is one catch to this. So the catch is private lending. So sometimes with private lending, you will have to pay a lender fee. So it could be 3%, could be 5%, could be less, could be more. I'm not sure. It depends on your situation. So you might have to pay a 3% lender fee on the money that you're borrowing. Likely you pay a higher interest rate on the money as well. And that money will become split with the mortgage broker and the lender as well, the lender fee. So there could be fees. Typically there isn't, and I think it's always a great idea to check with the mortgage broker. The other thing is that you could kind of shop around a little bit if you want, because I believe with your credit, a lot of people are afraid to constantly run their credit, but I believe what happens is that say you run your credit with Scotiabank on a mortgage, and then you go through another mortgage broker, and then you go to another bank. As long as you've done all those credit inquiries within the 45 days, you kind of have a little bit of a blanket. I think it's 45 days. We'll look into it and get back to you. But like, there is a bit of a blanket there. So same thing with car loan. If you apply for a car loan, and if you're kind of within that 30 or 45 day window, it won't be a multiple hit. It's just going to be another inquiry, but it won't bring your score down. All right, guys, that's kind of my opinion about going to the bank directly and a mortgage broker. I'd love to hear what you guys think. How do you guys like to get your funding and why? Let me know. And until then, guys, remember one thing: get Kabani, get sold.
Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.